Welcome to Pulling Money Trading. Alright, today is June 13, 2025, Friday the 13th. Okay, let's see if anything is gonna happen today. Right, because today is the day that they create a lot of myth about arrow and all that stuff. Anyway, let's see what's going on. Right, so my last video the account was down to like $1 and something. Pretty much the account was blown. Right, so go back to account history. Right, so see what happened. Alright, so yeah, on the 6th of the 6th, 2025, right here, balance this transaction right here, $4. So I transferred $4 into the account from another account that I have. Right, and this is the transaction. So I lost two trades right there. Right, one, two trades, last two trades. Risk management is good. Win one trade right there. Last three trades win. So account balance been fluctuating. Then major move in the market happen. So last 1, 2, 3, 4, 5, about 7 trades in a row. Then I was trying to build back the account up, but I realized that a lot of the trades I was getting stopped out because I was trying to secure the account as much as possible using break even and win-win, which in some instance it helped to protect the account. But when the winners come, I'm not profiting that much. So as you can see, a lot of the trades 51 cents, 61 cents. So that all of these are a result of trying to break even and using win-win. Right, so all of these 7 cent, 17 cent is trying to protect the account by using break even win-win, which pretty much was not working in my favor because I continued to get stopped out. Anyway, account went down to about 91 cent, but I had a trade open which pretty much knew the market was gonna go far. So I made like 600 pip from that trade, which bring back the account up. Right, so the balance for the account is now $7. Okay, so let's see what I can do with this $7 if I can turn this account around and recoup back the $20 loss and more. Okay, let's see if I can do that in the coming week. Okay, so I'm not gonna be using break even win-win. So everything I'll have to rely 100% on the strategy, maximizing on the trades. Let me show you this trade that I won. I'm gonna show you two trades. Right, so I'm gonna show you this trade that I won and have a trade a profit probably like about, not even sure, probably like about $1. Yeah, this one buy trade 14060, profit like about $1.79. The market went up maybe about 1500 to 2000 pip. So that's an issue right there. These trades that I'm taking, they're running they're running a lot of pips. So pretty much if I'm not maximizing on these trades, I'm not gonna be in front of the market. So that's what I'll be focusing on this week, maximizing on the potential winners. So right here, as you can see, this is a trade for $6.46 entry price, 16,114. So the entry was about 16,114. Right here. Okay. So for this trade, entry price was right here. Show you what happened. So right here. Okay. So the stop loss was 15,638. Let me set the proper parameters. Stop loss 15,638. No, for some reason, no, the stop loss is wrong because yeah, what I did, I had moved the stop loss to secure some of the profit right here. So that's the reason why the stop loss is at 15,638 because I couldn't take the risk of having the market pull back with the profit. So what I did was um, bring down the stop to secure some of the profit because the account was low. But anyway, stop loss was here, right, right above this level right here. So I'm gonna show you this trade, similar to the previous trade, nothing different, same strategy, right? So the market went up, right? Market went up, break below this area right there, right? Market break below this area right there. So it's the same strategy I'm using, nothing new, right there. Same strategy. Market buyers was in control of the market from here, pushing the market all the way up here, right? Sellers took control, intersecting right here, pushing down the market all the way to here. So price chart was giving me the information that sellers are in control of the market from here to here. Okay, so from here to here, right? If you realize the intersection is right here, where sellers took control of the overall market because buyers was in control of the market from pretty much all the way down from here all the way up to here. So it was a bull market, right? And this is a shift. This is a shift. Sellers now took control of the market, intersecting buyers right here. So because the price chart is giving me the information that sellers are in control of the market from this point to this point, right? I'm using the known to find the unknown, which with this information, it is now telling me that the market is likely to reverse and go further down, right? But before the market can go further down, right? Pretty much the market need fuel in order to fuel itself to push further down, right? So in this case, what I did was look where are the likely areas where sellers was in control of the market and which areas are the most likely areas that the market will come back to collect orders in order to fuel itself to push further down, right? So these were the likely areas, right? Market came back into this area before and collected orders, right? So this area wasn't a likely pick. So it was between this area where sellers was in control of the market, right? Let me zoom up. This area, right? This structure here with a strong red candle to the downside, which is an indication that strong sellers are in this area, right? So other trade in this area, and then this little area right here, same thing, indication strong drop, indicating that sellers, possible sellers are in this area as well, right? So as you can see, the market came back to this area right here and made a push down. You see how much pip, 15,931 to 15,867, maybe a bit over 100 pip, right? So for a short term trader, that would be ideal setup, because if you're trading like for 100 pip, this a lot of traders who were looking at 100 pip, this was a good win, right? So for the second era, which was this, market went through, right? Market went all the way through, right? Market went all the way through, and then voila, this era right there, right? This era right there, market came into this era where I had my order. So it was between these four eras, right? This era, this era, this era, and this era, right? Where sellers are in control. Okay, right? Where sellers are in control, right? So The price chart is showing strong red candle, strong bear engulfing candle, which engulf all these candles. Always an indication that sellers are in control in this era. So always use the known to find the unknown. The only way you're gonna know if this era is gonna work, you have to place a trade, and if the theory is right, the market pay you at least 3 times or more than what you're willing to risk. Okay? In this instant, this 2 era was a loss. So I think it was maybe these two trades. So I was risking 32 pip and 14 pip, right? To make 1,000 pip. So it's a big risk to reward, right? Big risk to reward. So these two trades didn't work, and this one worked. So there's no way to know for sure which trade is gonna work out. There's no certainty in the market, right? So all you have to do, according to the theory, you have 4 likely areas which can turn the market. Now, what you can do to eliminate some trades, right? Because you're buying and selling, right? You're always It's always best to look for the cheapest price. Okay? Because if you're selling the currency down to make money, these two eras right here, you're gonna pay more for the currency because it's more expensive at these two price. And at these two price at the top, it's cheaper. And there's more profit to the downside, right? So if I wanted to be technical, what I would have done was eliminate these two trades, because it's less profit to the downside, right? And it's more expensive, right? So these two eras would have been the ideal era, right? So this one work out, these two didn't work out. Okay? So as you can see, market came back into this era and then make a big drop to the downside of about, let me see how much people. 16,115 to 14,887. So 16,115 minus 14,890, 1,225 pip. Okay, so market sell down 1,200 pip, right? I took 600 pip off the profit, even though I had the TP for 15,108, which was a 1,000 pip move. I always like to capture at least 1,000 pip because these trades sometimes run 2-3,000 pip. Okay, so I always like to capture 1,000 pip. The only reason why I didn't hold because I realized the market came into a year right here and was retracing, was pulling back. Okay. And because the account was low, I didn't want to run the risk of the market turning back and took away all the profit. So I played it safe and said, okay, I'll satisfy with 600 pip because um there's always gonna be more trades. Okay. So yeah, this was a big winning trade. 1225 pip. The market went down. I took 600 pip. Not bad. Okay. For a small account, this is good, right? And the risk, I think this risk was about, let me show you the risk. I'm not risking a lot on these trades, right? In order to capture a 1200 pip move or a 500 pip move, a lot of traders they are risking a lot. These risks, I'm not risking a lot on these trades, so risk to reward is excellent. 16118, 16185. So 118 and to 120, right? 65 and 2, so that's about 67 pip risk. So I'm risking 67 pip to make 1,000 pip. Okay, 67 pip to make 1,000 pip. So let, let me see, let me do the math, right? So 14 times, right? So this is more than 1 to 10. So this is 1 to 14. Okay, so the TP to the risk was 1 to 14, right? 647 divided by 67, right? So what I captured was 1 to 9.6. Close, you can round it off to 1 to 10. So the trade that I won was a 1 to 10 risk to reward ratio, right? So the strategy is not the problem, right? Um, Mainly trading a small account, there's not a lot of wiggle room. There's not a lot of breathing space. So that's one of the issue. There's not a lot of breathing space trading a small account, right? Because there's not enough room for error. That's one of the thing. The next thing is that the orders are not being filled because I'm using limit order, right? And if the orders are not being filled, then there's no way. It is worse than even a losing trade for the market to come back to the order, go all the way into profit, and your orders are not filled. Because this is one instant again. This is a limit order that I have for the reverse trade. The market came. Let me zoom up, right? So as you can see, buy limit 11.1.14.887. See, the market came all the way down, right on top of the limit order. 1.14.889. So 2 pip away from my order, the market came right here. Right here. 2 pips away from the order, and the market is pulling back. Right? Market is pushing up 2 pips away from the order. And right here is 14,888, 15,229. So this is close to 500 pip. The market is retracing, right? So I would have been in profit at least 500 pip now. 888. So that's 13, 524. Yeah, about 350 pip roughly. I would have been in profit with this trade, right? Now if the market is gonna reverse and go all the way back up, right? Let's see how far the market is gonna pull back, as it's showing that the market is trying to either break through this level right here to go further down, or the market can um pull back all the way back up into this area, right, to collect more order, right, to sell down, right. So this was another trade. Let me see if I can find. There was a trade somewhere here, right, right here. I wanted to show you. Let me show you real quick. So this trade was a trade that I won. Same strategy, nothing new, right? So it's always the same analysis, but the problem is orders not being filled. Some of the trades I'm trying to play it safe and I'm being stopped out, right? And I'm not maximizing. So with this trade right here at 14,049, let me see if this is the right trade. Right, 14,060. Okay, so I entered at 14,060, right, which is right in this area right here, 14,060. Let me modify this. Right here is where I entered, right. So the stop loss 14,023. Risk to reward is excellent on this trade, right. 14,060, 14,023, right. So I'm risking um 37 pip, right. It's 37 or 27. Let me check. 7. Yeah, 37 pips, right. TP was 14,240, right. But normally I would risk one to make 1,000 pips, right, because I'm trying to, with this trade I was just doing a short term trade, even though I normally, these trades normally push far, right. This trade was for some reason I have this trade as a short term move, right, instead of sticking to the 1,000 pip, right. Look what happened. Same principle, right? Same principle. Explain. Same principle apply, right? So the market break above this area right here. Look, same principle. This was a era where sellers was in control, right? Sending the market down. The market break above, big push to the upside, all the way up to this era, right? So because same analysis, nothing new, right? So it's not a strategy. It's pretty much human error and three things: small account size, which is one; human error, two; and broker not fill in a lot of the orders. So as you can see right here, this is where the buyers took control of the market, breaking above where sellers was in control, right? So use the known to find the unknown. So the fact that buyers are now in control of the market from right here where the intersection took place all the way back down to this area right here. Now the known factor is anywhere on the price chart where strong buy pressure is, that's where you look to take an entry to the upside when the market come back. Because if you look at this area right here, this is the first point of interest right here. But the reason why I didn't take this trade is because there's a lot of activity in this area. This is a push to the upside with this candle, but I didn't like this area because too much was going on in this area, right? Let's see what happened when the market come back. So the market come back to this area. It worked, right? It worked, pushing the market up, right? Let me see how far. So it actually worked, right? This area actually worked, right? But I didn't like this area, so I didn't trade this area, right? Pushing the market all the way up 14,147 to 14,397, right? So about 250 pip to the upside, right? Now this was the second era, right? So as you can see, this was the next era of interest right here, right? This was the next era of interest right here, right? Strong, not a lot of activity, strong bull candle to the upside, right? So this was the era that I took, right? Strong bull candle to the upside, right? Always using known to find the unknown, right? The fact that strong bull candle is showing buy pressure, strong buy pressure, right? So when the market come back to this area, chances are more buyers are in control of this area. So if the theory is right, the market should go up. Okay, this era right here is another era, but because this era came back into this era was disqualified. Similar to this, right? This era came back here, so this era and this era is disqualified. So this era now is the next best era, and this era. So as you can see, I have limit orders here and limit orders here, waiting for the market to come back, right? Now, look how far the market went from this trade right here. So the market came back twice to this area before pushing to the upside, right? Big move, right? Big move, right? So from here, which is 14060, okay, all the way up to the top, 14060 to 16313. Let me check. 16313 minus 14060, 2253 pips. So these are some of the reasons, right? So that is an error on my part because I know majority of these trades that I'm finding and analyzing, they are making big moves in the market because these areas that I'm trading from, these are the areas where large institutions are trading from. The banks and the big hedge fund, they are making these moves in the market. So once you master this strategy and you can trade this strategy well, then you can capture big moves in the market like 1,000 pip, 2,000 pip, right? These areas are where, and this is a 1 minute time frame. I'm not trading on a monthly or weekly or daily time frame. Look, 1 minute, and I'm finding these areas on the 1 minute time frame where the market, the big institution and the big hedge fund are trading from, right? You don't have to take my word for it. All you have to do is backtest this system that I'm using, right? Forward test it on a demo account, see how well it works for you, right? So as you can see, it's not the system is the issue right now. It's human error, and orders not being filled. And the reason why the orders majority of the time is not being filled, I'm gonna explain that to you within the next 3 minutes, and then I'll close this session. Okay, look, this is where I have my order, right? This order wasn't filled, right? So as you can see in previous videos, a lot of the time I'm explaining to you that my orders are not being filled, and this is a reason why the orders excuse me, are not being filled, because I'm trading with the major institution and the major hedge fund and the banks. These areas that I'm finding are where the big institution have their orders, right? The reason why is because a lot of competition is here and a lot of orders are here to be filled, right? Let me just explain what is going on to you. These areas, a lot of orders are here to be filled, right? Because it's, remember, the market is made up of buying and selling, people buying and selling. So if this is where the major institution have their order, a lot of orders in these areas, what do you think is gonna happen? It's gonna hard for you to get a trade in this era when the market come back, because it's all about competition to buy and sell, right? So if there's a lot of, look at it this way, if you go to the market and there are fresh fruits, right? Say you like apples and there are big juicy apples, fresh juicy apples selling at a cheap price. You normally would pay, for example, $4 for a bag of apple, and when you go to the market, the same bag for $4 is now selling for $3.50, and there's only 10 bag. What do you think is gonna happen? There's gonna be a stampede to get those 10 bags of apple. So chances are, if you are not the first one to grab a bag, you're not gonna get any. So that's what is going on, right? So that's the reason why a lot of the time my orders are not being filled, because there's big competition to buy in these areas that I'm finding, right, where big institutions are trading from, right? So a lot of the time, a lot of my orders are not being filled. So buy limit, unfill, right? So if you look here where the market is coming from, right? Right here, the market only penetrated the area halfway, right? Right? Less than halfway. So there's still a lot more sellers in this area. So there's a potential for this area to push down the market again if the market come back to this area, right? So that's how it work, right? That's how it work, right? So now all I have to do is just look back to see this area. Buyers was in control, sellers intersect buyers. So all you have to do is just look back to see which area is more likely um where you can trade from. No, because a lot of buying and selling is going on, right? I don't use fundamental. I'm a pure technical trader, right? Price, everything that you need is in the price chart, right? So if a news come out and you have the right area to trade from, only thing the news is gonna do is just enhance the process, right? Because the market is made up purely of buying and selling, and if you can find where the buyers are in charge of the market and sellers, and find where it is likely for sellers to sell down the market and buyers to push up the market, that's all you need, to be honest, along with proper risk management, trading the system over and over, win or lose. So as you can see, this here right here, right, this here right here, price came back into this area. So this wouldn't be a good area to trade from, because buyers was able to push the market here. Buyers was able to push the market here. Buyers was able to push the market here. So the next possible area where buyers wasn't able to push the market was here. Price is now here, right? Price is now back into this area. Okay, let me see the risk. So this is 15,470, 15,394. So probably about 470, probably about 76 pip. Okay, so let me take a sell trade right here. Let me just take a sell trade just to see what will happen. Sell, okay, right? The only way to know you can't trade the market with fear, okay? Put my stop right above this here, right? The only way to know if this here will work out, you have to place a trade. That's how it works. There's no way for you to know 100%. You have to use the known to find the unknown, right? This is not really the best era that I would trade from, but is a potential area that can turn the market. Okay. Now, this era is not a good era. Buyers was able to push the market back to here. Now here is another potential, right? Here is another potential era, right? And let me see. And maybe here, right? Now, if the market break above these areas, then all you have to do is just continue to trace all the way back to where the market is coming from, because sellers are in control of the market from here from here to here. Pure from here to here, sellers are in control, right? So all you have to do is just look for here as in this sell market where you have strong sell pressure to the downside, right? The only way you're gonna know if strong sell pressure is in the area, and all this stuff that I'm explaining to you, to be honest, you'll have to pay a lot of money, right, for this information, right? And I'm giving it to you for free, right? Now, this big red candle is an indication that sellers are in control, right? That's how you know if sellers are in control, and the market took out this area right here where buyers will push the market up, sellers push the market down, causing an intersection. Same thing with here. Buyers push the market up, sellers push the market all the way down, causing an intersection. This is where the market is coming from. Buyers push the market up, sellers push the market down, causing an intersection. That's where you know if buyers or sellers are in control. Okay, so let's see what's going on with the trade. We're in profit, 25 cents. So far the era is holding out. Strong drop, strong red candle. Good, always a good sign, right? Strong red candle to the downside, which is an indication that sellers are coming in the market, right? So for this trade, I'm gonna hold this trade for 1,000 pip, 96 pip to make 1,000 pip. So this is about 1 to 10 risk to reward ratio, right? Everything set. So that's it for today. In profit 34 pip, right? That's it for today. So let's see what is gonna happen. Sellers are coming in the market as projected. So let's see if this trade will work out. So I'm not using break even. I'm not using win-win on this trade. I'm just gonna leave it, see if it will go all the way to take profit, right? So if this video bring value to your trading, hit the like button, subscribe, leave a comment, let me know what you think. Bless up.